Welcome back to the Daily Crypto Roundup. If you're new here, make sure to hit follow because this is where we keep you ahead of the headlines, not behind them. It's been another wild 24 hours in the crypto market. Bitcoin has officially smashed a new all-time high above $125,000, pushing the total crypto market cap back toward record territory. Ethereum and Solana are holding strong as capital keeps rotating across the majors, and we've got some huge news in adoption. Walmart just switched on Bitcoin and Ethereum payments for its customers. PayPal has expanded its stablecoin into 15 new countries. McDonald's has gone crypto with NFT-based loyalty rewards in the Philippines. And Dubai just became the first city in the world to let you pay for a taxi ride with Bitcoin or Tether. It's the perfect mix of hype, innovation, and real-world utility, the kind of stuff that keeps this space alive. So let's start, as always, with a quick look at the numbers. Bitcoin is trading just under $125,000, sitting around $124,927, up about 1.6% in the last 24 hours. Ethereum has climbed to $4,667, rising nearly 3% as traders position for the next leg higher. Solana trades at $234.81, gaining almost 2% on the day. XRP is moving quietly but steadily, up around 1% to $3.03. Cardano sits at 87 cents, adding more than 2% in the last session. Avalanche is changing hands at $30.69, also up around 1.5%. Dogecoin is up just over 3% at 26 cents, continuing to build on its recent rebound. Tron holds steady at 34 cents, up about 1%, while Chainlink trades at $22.82, rising modestly. Litecoin rounds out the top 10 at $119, easing less than 1% after a strong run earlier in the week. Overall, the market tone is upbeat, with nearly every major coin flashing green as Uptober momentum continues to build. Now onto the stories that are driving all this excitement. The biggest headline is still Bitcoin. After weeks of consolidation around the 122,000 mark, Bitcoin has finally broken through resistance and reached a new record high above 125,000. Analysts are calling it a textbook confirmation of long-term strength, with ETF inflows now at their highest level since launch. The combined spot Bitcoin ETF products across major US issuers have attracted more than $19 billion in assets under management. That's not speculative volume, that's institutional money. Large wallet data shows that while retail investors have been slow to re-enter, whales have been quietly accumulating. Wallets holding over 10,000 Bitcoin increased their balances by more than 2% in the last 2 weeks. That doesn't sound huge until you realize that's billions of dollars worth of buying power. One analyst described it as a silent supply squeeze, meaning Bitcoin's float is shrinking just as new demand explodes. The dynamic is eerily similar to what gold experienced in the 70s. A new monetary narrative meeting limited supply. Fidelity's research desk even published a note this morning calling Bitcoin the new base layer of digital liquidity. That phrase has been popping up all over institutional reports lately, and it's a big shift in tone. Bitcoin isn't being dismissed as speculation anymore. It's being treated as infrastructure, the same way investors treat treasury bonds or reserve assets. That's why the correlation between Bitcoin and traditional risk assets like equities keeps falling. It's separating itself from tech stocks and starting to behave like an alternative form of digital collateral. Retail interest is slowly catching up. Search volumes for how to buy Bitcoin have jumped by 30% in the past week, and transaction activity on Lightning-enabled apps has surged. It's the kind of wave that builds quietly before the next breakout. We've seen it before, and it usually ends with everyone asking if they're too late just as the next leg starts. But if Bitcoin's rally is the headline, the real story this week is how much mainstream adoption has accelerated alongside it. Walmart has just taken a step that most companies wouldn't have dared even a year ago. It's gone all in on crypto payments. The company's financial arm, OnePay, announced a full integration of Bitcoin and Ethereum into its checkout system. That means customers can now buy, sell, and hold crypto directly through their Walmart wallet, and even pay for their groceries, electronics, or household items using those balances. The rollout started quietly across select US regions, but will expand internationally by early next year. Walmart described it as giving customers more freedom in how they pay. But the market knows what this really is. The first time a global retailer of this scale has built crypto access natively into its payment network. The difference between this and earlier pilot programs is that there's no third-party processor. No Coinbase Commerce or BitPay in the middle. It's all done through Walmart's own wallet infrastructure. Analysts are calling it the Amazon moment for crypto retail. One commented, "When Walmart builds it, others can't afford not to." It's not just a symbolic win for Bitcoin and Ethereum either. It's a logistical one. Fees are lower, payments clear instantly, and transactions settle directly on-chain without the need for banks. Walmart says it's already seeing increased usage in states where unbanked or underbanked customers make up a large portion of its audience. That's the quiet revolution here. Crypto isn't replacing the existing financial system for Wall Street. It's replacing it for Main Street. The news sent a wave of optimism through the market because it validates what many in crypto have been saying for years. Adoption doesn't come from speculation. It comes from utility. If you can buy food, clothes, or gas using Bitcoin or Ethereum, it stops being an asset class and becomes money. Walmart just helped make that reality. And PayPal isn't sitting still either. The company announced that its PYUSD stablecoin is now available in 15 new countries across Europe, Asia, and Latin America. That's a massive leap from its US-only beginnings. PYUSD is fully backed one-to-one by cash and short-term treasuries. And with this expansion, PayPal now has the largest regulated stablecoin distribution footprint of any global payments company. The goal, they say, is to make cross-border payments as simple as sending a text. Users can now send it to anyone with a PayPal account overseas instantly and without conversion fees. For merchants, settlement happens automatically in local currency if they want to avoid exposure. It's effectively bridging stablecoins and traditional finance, a hybrid approach that regulators can actually live with. This is where we'll pause for a quick but important reminder. With Bitcoin and stablecoins becoming more widely used, the risk of losing control of your own assets increases if you leave them on exchanges or in custodial apps. I personally use a Ledger hardware wallet to store my long-term crypto. It's offline, secure, and totally under my control. Whether you hold a little or a lot, make sure you do the same. You've worked too hard to let someone else take that risk. You'll find the link in the description. Now, back to PayPal. What's interesting is how the stablecoin is being positioned. It's not just another dollar-pegged token. It's becoming the connective tissue between Web 2 and Web 3 payments. Developers can already integrate PYUSD into gaming environments, and PayPal is reportedly working with several major fintech firms to let users earn yield on idle balances through tokenized treasuries. It's a steady, regulatory-friendly route to bringing crypto to hundreds of millions of users, and it's working. But if you think mainstream adoption stops there, think again. McDonald's has officially gone crypto, at least in the Philippines. The company launched an NFT-based loyalty program where customers earn digital collectibles for every purchase, which can then be traded or redeemed for meals, merchandise, and limited edition perks. It's one of the first major fast food initiatives to tie NFTs to a real-world reward system. McDonald's says the move is designed to blend digital engagement with real-world value. Customers scan a QR code on their receipt, which mints a unique NFT on a sidechain that links to the loyalty database. The tokens unlock special menu items, limited designs, and regional rewards like free fries for a month or early access to promotions. It's fun, it's weird, and it works. Early signups hit 100,000 users within 48 hours. Industry watchers are calling it one of the smartest uses of NFTs since the hype faded. Instead of speculation or overpriced art, this is practical engagement, using tokenization to gamify loyalty. It's the same idea Starbucks tested with its Odyssey beta, but McDonald's is doing it at scale. And here's the key. It's not about blockchain buzzwords. Users don't even need to know what NFTs are. They just collect digital stamps and the tech handles the rest. That's what real adoption looks like. Invisible blockchain powering everyday behavior. And speaking of everyday behavior, how about using Bitcoin to get across town? That's now possible in Dubai, where the city's Roads and Transport Authority has approved crypto payments for its entire taxi fleet. The system supports both Bitcoin and Tether through an official government-approved app that connects directly to the city's payment gateway. When a rider books a taxi, they can scan a code at the end of the trip and choose whether to pay in fiat or crypto. The app handles conversion instantly at market rates, and drivers receive payment in dirhams. It's not some rogue pilot. It's part of Dubai's broader smart city initiative that treats digital assets as legitimate payment infrastructure. This is more than a novelty. It's a glimpse into how governments might adopt crypto without overhauling their currencies. Dubai already leads in blockchain regulation and licensing, and this move cements its reputation as the testing ground for financial innovation. It also adds a dose of cool factor. Imagine landing at Dubai International, hopping into a taxi, and paying your fare in Bitcoin. That's a story people tell their friends, and that's how adoption spreads, one frictionless use case at a time. Zooming out, it's easy to forget how much has changed in such a short time. 5 years ago, headlines like these would have sounded like science fiction. Bitcoin at 125,000, Walmart taking crypto, McDonald's launching NFTs, and taxis running on blockchain rails. But this is the new reality. Crypto isn't fighting for legitimacy anymore. It's embedding itself into the world's biggest companies, cities, and payment systems. As we move into the rest of the week, the focus shifts to follow through. Will Bitcoin hold above 125,000, or will we see a pullback to retest support around 122? One thing's certain. Adoption is no longer theoretical. It's happening everywhere, from grocery stores to fast food to public transport. The world is onboarding, quietly, one payment at a time. And if history tells us anything, it's that once the mainstream joins in, there's no going back. That's your daily crypto roundup for today. Bitcoin breaks records, Walmart and PayPal push payments into the future, McDonald's turns loyalty into collectibles, and Dubai lets you pay your cab fare with Bitcoin. The cycle's changing, the use cases are multiplying, and the world is watching. Follow for tomorrow's update, and as always, we'll see you at the top.